Welcome to Explore HVAC and Home Services, where we uncover the stories, strategies, and some secrets behind successful businesses. I'm your host, Pam Mashburn, and today we're joined by a different guest. It's not a HVAC owner, but this is Dillon Caraway from Live Oak Bank. If you, as an owner, have ever thought about getting a loan or expanding your business or buying another business, he is a great resource to know. So I thought we'd kind of kick off. And Dillon, tell me like your title, how you got into this business, because you guys are focused mainly on HVAC and the trades, right?
So my team specifically, so I think it would be helpful just to first introduce myself and can kind of introduce the bank and how we got into the wonderful world of, working with home and commercial service contractors. So my name is Dillon Caraway. I'm a senior loan officer at Live Oak Bank. Been with the company since 2017, have held a few different roles, but I've been in this role specifically since 2020. And, kind of my day to day is working with contractors, business owners, and different industry partners. So think everything from manufacturers to distributors to success groups, coaching groups. And what I do is I really help contractors evaluate potential growth and transition opportunities for their business. So review financials, kind of help put budgets together and really explain to them different products and services that are available through our lending and SBA lending program to help them grow their business. So, long story short, I do a little bit of traveling, get out and meet with a lot of people in person. But for the most part, working with contractors, reviewing their financials and trying to put creative loan solutions together for them.
I love that. Well, I know you and I even had a discussion when we were buying our building just to kind of understand what the opportunities were. So, um, how long have you been working with just the HVAC and home services industry
Yeah, so
specifically? Because I know you've been in this business for a while, although it doesn't look like it. You look so young.
so our bank was founded in 2008. We made SBA loans to veterinarians, and we helped vet owners buy their first practice, buy their second, third practice. Help them buy their buildings, things of that nature. And we got really good at doing that, and started researching different industries in the U.S. That had low default rates through their SBA lending programs. So it took a lot of research, and fast forward to today, we're specializing in 40 plus industries. So everything from like self
Wow.
storage facility financing to funeral home financing. And I work on our service contractor team, and that's primarily HVAC, plumbing, electrical. We're starting to see a lot more roofing and garage door service companies as well. But we've been in this industry specifically since 2018. I joined in early 2020. Um, so coming up on 8 to 9 years in the industry, and we've seen a lot of growth. I think in year one, we closed $17 million in loan production. And
Wow.
last year we closed 70. So we're growing every year. And, a lot of what we try to do on our team is just educate the industry because we feel like this industry's been heavily underserved by financial institutions in terms of working capital financing, acquisition financing, debt refinancing. Um, Banks are really good at making loan to value commercial real estate loans because there's tangible collateral they can touch, but
Mm-hmm.
they're not super comfortable making goodwill loans where there's not available collateral to secure the debt. So that's where we come into play through the SBA 7A program to help provide financing based on cash flow and goodwill of the business.
So yeah, this is interesting. So I've heard I haven't got an SBA loan, but I have looked into it, just as an in case thing. But I've heard that it's a little bit more complex to apply for an SBA loan as opposed to just a regular loan. Is that true?
So there's, so government guaranteed lending program that is facilitated through banks such as Live Oak. So there's going to be
Mm-hmm.
a lot of paperwork involved, but my one piece of advice when I'm working with contractors or discussing benefits, pros and cons of SBA versus conventional and like traditional bank loans is if
Mm-hmm.
you're applying for an SBA loan, it's important to apply through a preferred lender through the SBA program. Live Oak is a preferred lender. So we have the ability to collect documentation, approve loans, and disperse funds in-house versus, kind of packaging that up and submitting it to the SBA for their review process. So it
Oh.
essentially like expedites the timeline. But
Mm-hmm.
also, a lot of local banks are really good at again making that, commercial real estate loan or making your mortgage loan or an auto loan, but they may do one or two SBA loans per year. So if they try to process that application, they're kind of learning on the fly. So another piece of advice is you don't really want to be the guinea pig for that bank for the year to have them explore the SBA program. I would do research and see if the bank you're applying with has a lot of SBA volume, because if they're one of the top producers in the SBA program, they probably got their systems and processes in place to help make it as smooth and seamless of a process as possible.
That's great. I think that's great advice. That's just stuff I wouldn't have known. Um, you play such an important role in a business owner's kind of tool chest, right?
Hmm.
Like we have the accountant, we have the insurance guy, and I think as a really um, important thing is to have that person that you can call and say, "Hey, I'm thinking about this.
Hmm.
What do I need?" And so, do people have you on speed dial and ask you questions before they do things? Like someone approaches them
Certainly.
about buying a business or whatever. Do they have you on speed dial?
I would say on average, and this is going to sound crazy, but I probably take 20 to 30 calls with a customer before a loan ever funds.
Really?
Oftentimes, we're working years in advance because a lot of what we do is succession planning. So, helping a owner sell their business to a key employee or a family member. And oftentimes, you're planning 1 to 5 years out for that transaction. So I'm able to help guide them through the process, kind of let them know what their numbers look like, where they need to be to get that certain price they want to sell for, things that we would look for in a buyer. So oftentimes, I'm working with business owners well in advance of when we would ever even start the process. So the most of my days are spent on the phone, just kind of help educating and guiding folks in the right direction and helping make sure that when they are ready to apply, that they have kind of everything cleaned up on their financial side for personal and business purposes.
Who else is involved? Who is it? Who are there other players that if you were wanting to sell your business to like a family member, key employee, or whatever, because neither party is probably real well versed in this. So,
Yeah.
what other resources would you want to get involved in this? And do you have recommendations on that?
That's a great question. I think having a broker is always important. We do have some relationships with industry specific brokers that are great people and know the industry very well. So I think engaging in a broker, even with like, selling your business to a family member can be really important because you don't know what you don't know.
Right.
Oftentimes
I
this
mean, you
is,
don't do it a million times in your
yeah,
lifetime, I mean,
this
it's
is
like buying a house. By the fourth one, you figured it out, but the first and second, you make a lot of mistakes, right?
And this is often the largest like financial transaction of their life. So you
Oh,
want to
yeah.
make sure you have professionals in your corner. I think also CPAs are super important to engage in the process. Legal counsel, making sure that everything is buttoned up in your purchase agreement and everything like that to make sure both buyer and seller are being protected.
Mhm.
I think a financial planner to say if you want to sell your business for 3 million bucks, how does that look after retirement? Because you're not going to be collecting income from that business anymore. You're going to be relying on the essentially the assets that you have after selling the
Right.
business. So, making sure you're thinking about the tax burden, the I guess lifestyle plan moving forward. So if I had to, really sum it up in three different buckets. I would say a broker, an attorney, and CPA and legal counsel. So four actually.
Mhm. I like the financial planner piece too. I know we bought a building that we're in, and, I was in the market. I had some cash. I'm like, "I wanna buy the building. I'm tired of paying rent." And the people that we bought from, this commercial office building, was an LLC of family members,
Hmm.
and they did not want the tax implications of it. So they
Hmm.
they made a really incredible deal with us, where it was basically like a lease to purchase,
Yep.
and it was I mean it was really a sweet deal, and it also gave me the opportunity to get out of it, but I remember going, "I've never heard of this kind of situation." And so I was really having to ask people, I'm like, "Where I think I'm getting scammed, but I'm not sure." And so I did have to go out and find that counsel, and I found out that it's not something that you do quickly,
Yeah.
right?
And
You
we
know,
we see
and
something very similar on the business side as well. I think historically how a lot of these businesses have transitioned, because this has been an underserved industry in terms of like banking and financial institutions, is with seller financing. So Pam, if
right.
you owned your heating and air business and you wanted to sell it to me as your key employee, it's typically, done with a handshake agreement in the past. But that can come with some benefits, but it puts all of the risk really on you, Pam. As if I don't operate the business to the same levels that you did, or if I take my eye off the ball, then the business starts declining, and you're really left with an asset that doesn't have any value, and that puts kind of that sale or purchase price in jeopardy for you. So when you're able to engage a bank that kind of helps spreads the risk, and it helps the seller get paid for the all the years of dedication and hard work they put into building and growing that business, and it also holds the buyer accountable because they know they have to make the payment to the bank.
Well, and I think there's something I've talked to several businesses, HVAC businesses that were family owned, and you know a few of them because we've been to conferences together, and there's one father son team, and there was a grandfather involved, and um, you know it was interesting because he said they're utilizing some coaching programs, and the father was able to get out of it.
Hmm.
And I said, "Well, how much are you showing up?" And he goes, "I'm not. I'm not. I got bought out. I'm done with that." And it's really freeing for that next generation to be able to say it's mine and to not have to keep. And then on the flip side, I've got a couple of clients where their 80-year-old father still coming in, and it is old school versus new school, and it's a lot. So I think there's a lot of benefits to going ahead and doing kind of a clean break.
Yeah,
Not to say that you wouldn't be able to counsel them, but financially to be clean of that, right?
yeah, I agree. I think having a transition period is super important to really just get a feel for how the previous owner has operated the business on a day-to-day or month-to-month basis. But kind of to your point, that new owner is often going to bring new perspective, new ideas, new
Hmm.
growth strategies into the business. So maybe that old owner was a paper-based company, and our new owner wants to come in and implement field management software, or maybe they kind of want to rewrap trucks and give it a fresh look.
Hmm.
And if you have old owner and new owner both in the building, um, they can start to butt heads, and then that kind of funnels down to employees, where employees have answered to their previous owner for the last 20 years, but now they have a new owner, so it can kind
Right.
of cause some confusion as well. So
Right.
we typically see transition periods, I would say, between 3 to 6 months. Sometimes they're shorter than that, sometimes they're longer than that. But it's also, I think, really important for sellers to realize what does their life look like after they sell the business. Because I think one of the hardest things to realize is that's not their business anymore.
Hmm.
So fi- emotionally being able to let go of the business, I think, is always important.
Yeah, we had somebody on the podcast, Patrick Carr with Blue Collar Media, and we were talking about branding and how a company has got your name on it. And I said, so do you make the branding about the owner or not, or do you make it about just the business? And he and
Hmm.
he said one thing to consider, and it goes along with what you're saying, is if you're going to sell the business, are you going to be okay with driving by that business and seeing your name on it and knowing you have no control of what's going
Yeah,
on in there? And that's hard for a lot of business owners because they have it's blood, sweat, and tears in there, right?
most certainly.
Yeah. So tell me, like, the most successful transition that you've seen, like what they did to make it successful.
I think buying a company for the right reasons is always super important. You hear a lot about business owners or first time buyers wanting to acquire and roll up companies just to kind of build revenue without really thinking about growing strategically.
Mm-hmm.
So maybe they get so enticed by a revenue or EBITDA purchase price multiple that they kind of lose sight of the asset they're actually buying. So I think growing strategically is super important. Figuring out what synergies you have with your existing business and the one you're going to buy. Maybe you're a heating and air company and you've wanted to get into plumbing for a really long time and you didn't really want to start that division from the ground up. So you want to go acquire an existing plumbing company. And that brings a load of benefits. Plumbing is not quite as seasonal as heating and air.
Mm-hmm.
And then you're kind of combining two customer lists that will essentially you'll be able to cross sell to each other. Um, so I think the most successful transactions are always with folks that grow strategically and really kind of think through what this looks like in year one, but also what it looks like in year five, and kind of where they want to be.
I love that advice. I'm actually writing some notes because I think it's really good. So sometimes people come. So let's shift to the other side of offerings that you do. It's not just, selling your business or buying a
Mhm,
business, but it might be expanding your business.
mhm.
How are you able to help? What are some opportunities for HVAC companies?
So right now, what we're really seeing trending in the market is working capital financing and
Mm-hmm.
commercial real estate financing, and that really helps support the organic growth of your business. So if you
Mm-hmm.
think on the working capital side, investing in marketing, advertising, hiring, trainings, maybe personnel, can really help position your business well for growth. And there's two ways to do that. You can either spend the cash off your balance sheet to do that, or you can take a loan to do that. And if you're going to take cash off your balance sheet, you always want to make sure that you have some level of cash reserves. As I've mentioned, this is a very seasonal industry, and I always think it's really important to make sure you kind of have that treasure chest of cash if you ever need to access it to help make payroll during the shoulder season.
Mm-hmm.
But on the flip side, if you're going to take debt, make sure you're taking on the right type of debt. There's a lot of lenders and financial institutions that will make short-term, high-interest debt very easily accessible for business owners. So they'll get a pop-up in their field management software or through their email to say, click here and apply for a loan, get cash now, and they don't really read through the fine print. And the next thing they know, they have a 1 to 2 year term loan that's charging them 50% interest that they'll never be able to get out of.
Oh my
Um,
gosh. Sounds like a
so I
payday
think
loan.
it is,
Yeah.
yeah. We
Except
we
in
see
reverse, right?
we see a ton of them, and
Really?
sometimes they are difficult to refinance. Our main goal is to be able to finance those for as many business owners as possible, but sometimes they
Mm-hmm.
get so deep into them that it's hard to kind of lift that burden. But if you
I
are
mean, I
looking
get
at
it because if you can't make payroll, you don't have employees. So I mean,
yeah.
I can see how you could get into a desperate situation. But wow.
But yeah, I mean, there's also really good working capital financing products. We have it's called Live Oak Express.
Mm-hmm.
Minimum starts at 10,000. We can go up to 500,000 if cash flow coverage is strong. And
Mm-hmm.
that's a 10-year loan, 10-year amortization, no prepayment penalty. Your interest rate is going to be about 10% based on today's rates. So very favorable terms. Can access those funds in about 3 to 4 weeks from start to finish. So it's not
Mm-hmm.
like a 90-day process, but it's also not like a 1 to 2 day process. So
Right.
trying, to think about, financial planning for next quarter, kind of what growth do you want to see? What investments do you want to make? To make sure you can select the right financial tool to help get you there.
Yeah. I
And then
think that's the planning that's the important part. What were we gonna say?
and then on real estate, we've seen a ton of real estate interest over the last, I'd say, 18 months.
Uh-huh.
Yeah, we're in somewhat of a declining rate environment. Rates have gone down a decent amount in the last 12, 24 months. And I think a lot of folks are kind of like yourself. They want to start building equity for themselves instead of for their landlord. They want to take advantage of tax and depreciation write-offs. They want to have control over their own facility. And I think one of the most stressful things that a business owner can go through is have their landlord reach out and say, "Hey, we're selling the building. I need you out in 90 days."
I know, and you
Especially if
set up your
that's
Google business profile on it, and it's a real hassle, right?
yeah, especially if you're
So,
in the middle of busy season where like you literally are working 12 to 16-hour days. So having
mhm,
control and freedom over, kind of how the business operates out of that facility is super important.
right.
So we're seeing a lot of real estate transactions right now, more than I've ever seen since I've been lending in this industry.
Mhm.
And folks are able to take advantage of 25-year terms, 25-year amortization, so their payback period. Oftentimes, if you're an existing business owner, you can apply for 100% financing, so not having to put cash into the deal
Really?
can be a huge
I
benefit.
didn't even know that was out there.
Yeah, it's called the SBA
Oh.
expansion program, and essentially,
Uh-huh.
we take your existing business as a co-borrower on the loan and use the equity from that business balance sheet to kind of satisfy
Mhm.
that requirement. So it's
Wow.
super impactful, and that applies for working capital and acquisitions as well. So if you're an existing business owner, again, that's been generating revenue for over 12 months, the SBA loan program has great and flexible down payment options.
Hey, I have a question because it came up in a forum that I'm in. And it was, does does it help if you are a woman-owned business or veteran-owned business in the SBA loan process?
So I will say we love working with women-owned, minority-owned business owners.
Mhm.
To my knowledge, the at least the programs that I participate in on a daily basis, there's no like tangible benefit. I
Mhm.
think it really comes into play post close when you're actually operating the business. I think it helps you with a lot of depending on what type of work the business does with like winning certain contracts and certain types of jobs.
Yeah, how big the jobs are, yeah.
Hmm.
Especially government-backed jobs, they
Yeah,
really do look at
exactly.
that. But it doesn't really help you in the loan process, it just helps you in the, contract award, right?
Yeah, again, we love that type of business owner profile, but we're also taking a look at personal credit, industry experience, liquidity, things of that nature as well.
So it wouldn't make sense to make the woman if it was a husband-wife team, it doesn't make sense to necessarily put the woman as the primary owner in a loan situation.
I mean, I don't want to speak to that. We see a lot of folks structure it that way, and a
Yeah.
lot of very successful businesses run in that manner. Really, we kind of look at them as a whole. So whether
Okay.
they're 51 or
You're really looking at the
49%,
whole business, not just the person.
exactly. That's
Okay,
correct.
gotcha. Yeah, sorry I put you on the spot there, but
No
had to
worries.
ask. Had to ask. Um, well, this is really interesting. The real estate piece is really interesting, and I'm gonna add just from a marketing standpoint, that one thing that owners should really be looking at is the location because that's really important to Google. I know I've
Mhm.
worked with a lot of clients that are moving out of a building, and it is kind of a pain in the rear to get recertified. And depending on when you move, can affect the number of leads you're going to get. So you want to try to do that in a time where cash flow isn't going to be an issue, where you're going to be okay with not having as many phone calls because Google's going to re-verify that. But if you go like I've had a client that was on the outskirts of town, like in a technology park, way far away from residential, and he was a residential HVAC,
Mhm.
moved into more of the center of a residential area,
Mhm.
and his leads just automatically increased. So
Yeah, that's
not only
awesome.
just buying the building, but where the building is can really increase the revenue on your business.
Yeah, I think as a business owner, you really have to be strategic about every move you make.
Hmm. Yeah. Well, and it can impact the technicians that you hire and where they're
Hmm.
located. I mean, there's just a lot. But we work with a lot of growing, like we don't really take clients on unless they're planning to grow their business.
Hmm.
So there's a lot of strategy that goes into not just being 5 mile famous, where you own the 5 mile radius of your business, but as you start extending into 10 mile and 50 mile, a lot of that includes, buying real estate or at least renting to buy.
Hmm.
Um, yeah, this is some really great stuff. Um, so is there any business that's too small for you to work with or too big?
I would say probably revenue has to be at least 250K.
Okay.
That's probably our minimum threshold. And then, we have contractors in our portfolio that are doing 40 to $50 million just on my team. We have a middle market lending team here at the bank as well that has great conventional products that have businesses that scale way above and beyond 40 to 50 million. The smallest loan our team has made has been $10,000. So the largest my team has made has been 30 million bucks. So kind of a wide variety of products.
That is a wide
Um,
range.
yeah, but I would say our average customer is doing revenue between 1 and 10 million bucks. That's kind of the sweet spot for our products.
So over a million is usually
Yeah.
where people, yeah, because it's almost like that next hurdle, right? It's like that
Hmm.
next growth that's going on. I always think that when you hit a million, that's when things start breaking. All of a sudden you've got to make sure you've got a full-time person doing your books, a full-time person answering the phone, more texts.
Hmm.
There's a lot more burden there, I think. And so I can see why you would need the capital. Um,
Yeah, growth can come with a lot of challenges, that's for sure.
uh-huh. Is there anybody is if somebody came to you, have you ever had somebody come to you and you said, I don't think this is a good idea for you to borrow money.
Yeah, I mean, if they're over leveraged on their personal side, it might not be a good idea to take out a government guaranteed loan. If they can't manage their personal finances, that probably isn't going to translate to managing their business finances appropriately. Work mix is really important for us. We really like residential, like commercial service repair, add-on replacement. Um,
Mhm.
so we try to, be cautious when lending businesses that do a lot of revenue with new construction installation, just because that revenue is not as sticky and reoccurring.
Mhm.
Um, and I'll be the first one to tell a customer, hey, I don't think it's a good fit for us, and these are the reasons why. Because if I make a loan to a customer, um, oftentimes it's a goodwill loan, so we're not taking collateral to fully secure our debt. So if that loan goes bad, the bank doesn't have any collateral to liquidate, and then our customer has defaulted on a government guaranteed loan, so nobody wins. So sometimes it is a hard conversation, but I'm more than willing to have that to be transparent to make sure we're not putting anybody in a tough situation just to close a loan.
Yeah, no, I like that. Um, if somebody is, I mean, do most of the people that you meet, have they already, with those $1 million ones, are they coming
Hmm.
to you and they're like, yeah, I don't have any debt in the business, but now I'm ready to grow? Or do most people have debt in the business and they just need additional
Yeah,
funding?
I think most folks are typically always going to have vehicle loans. Vehicle equipment loans is typically what we see most often.
Hmm.
Sometimes if it's a business owner that's going to acquire their first business, typically they don't have any type of business debt outside of those vehicle or equipment loans. But we'll also see real estate involved with businesses as well on their balance sheet.
Yeah.
But most of the time, I would say folks in this industry manage their debt, very responsibly and aren't just going out taking loans just to take them out.
Yeah, I would concur with you on that.
Yeah.
I mean, the people that are one of the reasons that we niched down to HVAC and home services is it's just really good people. Like they're conservative and they're running in their business and they're people that are looking out for their customers, their community involved, and I just feel like they're just in general just good people.
Yeah, they
Um,
truly value culture and relationships, which I think
mhm.
um, can be difficult in certain industries especially when you really start growing and making a lot of money. You can kind of lose sight of that sometimes, but I think this industry does a really good job of making sure they're looking out for their people.
I absolutely, absolutely. I'm looking over my questions that because I totally went off. I always give my guests a list of questions, and I haven't asked Dylan any of these questions. We totally went off script. So this is how good you are,
That's
Dylan. You know your
okay.
stuff. um, so we kind of talked a little bit about notable trends in the industry right now, and you
Mhm.
talked about that there's a lot more real estate financing. Are there any other trends that you've been seeing in the industry?
Yeah, I think. really, we're seeing it from all different angles. And I think, each year that we're in the industry, we're able to further educate the industry.
Hmm.
So it's kind of a lag effect. Like I work with a lot of contractors that I met multiple years ago. They'll say, "Hey, I met you down at a contractor event. I got your business card, and I'd love to have a conversation." And I'll kind of look back at my notes, and that was 3 years ago. So we really just try to educate the industry, and I think the more we educate the industry on available tools and products available to them to grow and transition their business,
Hmm.
the more interest we're going to see. Um, but I really think declining interest rates, lowers the cost of capital, and I think a lot of folks are really going to take advantage of that to try to grow strategically with interest rates being a little bit lower than they have been the last few years.
Yeah. So, if you could give one piece of financial advice to a business owner who wants to build a 10 million plus company, what would it be?
Have clean books. If you go to
Okay.
apply for a loan and your financials are all messy and you're trying to make all these different types of adjustments to your profitability, that can cause kind of a lot of noise in the financials, and it
Hmm.
takes a lot of diligence and providing additional documentation and providing additional narratives to try to figure out if it makes sense or not. So really just having clean financials is the first step, and then I think too is really trying to grow strategically. Do you want to buy your local competitor just because you think it's a good price for the business and you really don't know much about what that business actually does, or do you think it's truly a good fit for your long-term growth plans and your vision for where you see yourself in 10 years? So I think clean financials, growing strategically, are probably the top two that I would mention.
Hmm.
Um,
Yeah, I think those are great. Those are great. That's great advice. Okay, so last question. If any of our listeners are interested in financing or at least having a discussion with Dillon at Live Oak Bank, what would their next steps need to be?
yeah, it starts with just a conversation. Again, you don't know what you don't know. I'm always open to just have a conversation, phone call, shoot emails back and forth or text, and just kind of explain this is kind of where I see your business currently. This is what I think we
Uh-huh.
can do to improve it with, our certain products. Or if your goal is to sell your business for this amount, this is kind of where you need to be. So reaching out and just having that initial phone call is the most important step. And I'm sure that you can share my cell number or my email address or contact information in the show notes, maybe. I'm not sure
Yeah,
how that works,
absolutely. We'll get them
but
on. We'll get them on the bottom here. So
yeah, that's perfect.
yeah. So hey, thank you for joining us, Dylan, and thank you, listeners, for joining us here at Explore HVAC and Home Services. We love. I learned as much as y'all did. I think it was really interesting. And for our listeners, remember to subscribe for more insights, more stories, more tips from all these leaders in HVAC and home services. And until next time, keep learning, keep growing, and keep exploring.
Thanks for having me, Pam.
Um,